have Miss Amy Wartzman from Eastern Bank coming to present to us now. And Amy, before you start presenting, I'm going to have you answer a question that's been in the chat a few times, but I was like, I want a lender to answer it. Hold on, let me make you a co-host because you can't do anything right now. Co-host. There we go. In the chat, they asked, what happens if they have a child who's over 18, they are in college, they do work study, so they work less hours during the semester, but then they work more hours in the summertime. Does that count as household income? How does that math all work for you lenders?
So when they're a student, we definitely take a little bit of a sort of, I would say, a more gentle review of it. We're not going to necessarily hit that student for like a full 40 hours. We're going to look at where those year-to-dates are, but we will add it to compliance income. When you have a high schooler, it's different. So I would say get that full pay stub in if you can, or from the university or wherever that income's coming from. Just get us a number that is their full year to date, so we can see what's going on. That was a good question.
That was a great question. Thank you so much. And now you can take it away, everyone. This is Amy
Okay, great.
Wartzman.
Hi, everyone. My name is a Wortzman. I am a loan officer with Eastern Bank that is focused on low, moderate income, first-time home buyers, and using all the different resources and programs that you're going to hear about tonight and have and will. Some of my favorite products are coming up in your curriculum tonight. That's MassHousing Partnership. But tonight in my time slot, I'm going to talk to you about a program that Eastern Bank has on the portfolio for first-time homebuyers. And when a bank says that it's a portfolio loan, that means the bank holds the note. We send you the bills, we help you with your tax payment. We do not sell it on what's called the secondary market. Okay, different kinds of loans sometimes are held by the bank, others are sold on that secondary market. So the loan I want to talk about tonight is called One Community. It's a catchy name, and what this product is meant to do is serve those that are within certain income limits, like you've seen tonight, lots of different matrices for us to check. You heard that some programs are all about the household, so that question was perfect. Everyone in the household. One Community is just the applicant. Okay, I'm going to say that again. One Community is just the applicant. The reason that is significant is because if you have a household that busts the income on other programs, this might be a really nice alternative. But why would you care? Let's get real. Let's get real fast, okay? One Community is a 30-year fixed mortgage. It does not have private mortgage insurance, that PMI you might have heard of. And ready, everyone? Here it is. Your ears are going to go, what did you just say? We can do up to 100% financing if your score is a 680 or above. Let me say that again, 100% financing with a 680 or above, no private mortgage insurance, okay? And the rates, believe it or not, are not that far off from some of the first-time homebuyer products that I just talked about. And I love saying their names, that MassHousing Partnership, because you want to get used to these words as you go through this journey. And so as a loan officer, when I review your scenario, there's going to be times that I lean into One Community. What's another reason I would do that? When we qualify your loan, meaning we look at how much debt and how much income you have, you'll hear lenders use the word debt to income ratio. What that means is how much can you afford on paper? Now, let me give you some quick numbers to illustrate the point here. One Community allows us to push that debt to income ratio to just below 50, literally 50.00. I could do that. Okay, I see that question. I'm going to come back to credit score in just a second because thank you. You've reminded me something as well. So MassHousing Partnership says your housing payment cannot exceed 36% of your income. On my One Community, I could take that up to 50. We can see numerically there's a difference. It doesn't mean one is better than the other because you are in the driver's seat and you're going to decide where that payment fits into your budget, but it's nice to have options. Okay. And I see in the chat, the question is, what is the credit score we need? And it's a 680 for 100%, but I want to also mention if you have a 640 or better, we can do 97% financing. Okay, it's a really lovely tool. It's what you call the manual underwrite, which just means your credit score is X, your income is Y. We do some calculations, and we are not running it through what we call a desktop underwriter or a software system to see, does that file come back? I'll make it simple with a green light versus red. Okay, so a little bit easier for us when we do these calculations, right? It's black and white. It is what it is. How long is that offer? There's no timeline. It's a portfolio product. We do not have a timeline on it. I expect this product to be around for quite some time. That's a great question. And the reason I would say that question came up, very valid. Sometimes when you see, I'm going to use the word gimmicky, right? It might sound a little gimmicky, or these like cute little marketing names. It sometimes comes in the market and then it leaves. This is a pretty stable product for us. And I'll be very candid with you. It came to Eastern Bank through the acquisition and merger of Harbor One Bank. It was a product they had. And when the two banks came together through that integration, that product went live for us. Let me highlight a few more things just to keep your mind spinning as you go learning about these mortgage products. We can do this product on a single family, a condo, a two family, a three family, or a four family. Now, here's something that I want to just mention, okay? Mass Housing Partnership does not qualify that rental income to figure out if your income holds, right? Compliance income. Rental's not counted. On one community and Mass Housing, it is. The reason I mention that to you is because I've studied this quite a bit and I've noticed that as the income pushes up, and we bring in rental income on some of these higher priced properties, it just doesn't hold. Okay, so let me give you an example because I have my income limits over here, but I don't dare play with tech tonight after what I saw. I'm just going to be a storyteller in your ear. For Boston, Suffolk, right? I'll just follow Christine right there. My income on the one community can go to 120,160. Okay. Now, I want to share with you quickly how we do compliance income because you might be someone sitting on the Zoom tonight that goes, yes, yes, I make 116,000, I'm in. I just need you to know that I'm going to review your whole pay stub, okay? Whole year to date. So there could be some other line items that actually go into that compliance income, and we often can get a number that's actually higher than what you're making. So I just want to point that out that compliance income may be a more bloated, juicy number than the qualifying income, which is how we figure out your loan. So one community is kind of nichey, right? It fits where our bank has branches. So we have a list of counties. Okay, I'm just going to be honest right now, just as an example. If I have a client and he or she is looking, let's say, in Middlesex County and Suffolk, they're good. They pop out to Worcester County. I cannot do this product. I can use my other products. So what happens when I work closely with a client, I'm very interested in knowing what markets and counties they're considering because we may very well have different pre-approvals for different towns or counties. And that's another reason why it is so important for you to be in strong communication with your lender and your realtor, and also your realtor and your lender. I call that, Denisha hears this all the time, anyone that works closely with me, the power pod. Okay. So as a lender, I'm bringing you product. Okay. And the other thing that I wanted to share with you tonight as sort of a best practice, and while I get the stage, because people ask me all the time, what are some of the things that you would really recommend when getting ready to buy a house? And it's really about the budgeting, but it's also the document preparation. Friends, when I tell you if you haven't done pre-approval yet or gotten all your documents together, that is the best thing you can do for yourself and for the lender and for all the stakeholders that you're going to hear for like City of Boston, Mass Housing Partnership. Everybody needs to review documents. So the best thing you can do is get that electronic file put together with clean, legible PDFs. Please do not send individual JPEGs. Please do not take pictures while sitting on your coffee table one by one of your tax returns. Okay. You need to learn how to get your bank statements. If you're not familiar with, let's say, online banking, Try to learn so you can grab those PDFs. Or maybe you visit your branch and get those documents printed but signed and dated. Okay. We really need to have that packet so that we can understand every little detail and see if there's like a surprise in there or something that needs more explanation. You want to flush all of that out at pre-approval. You do not want to fall in love with the house and have a problem. Okay. So the biggest thing as you learn about these programs and products, we all review the same documents to see what does it look like. So I'm just going to rattle it off quickly to hear it. Okay. It's kind of the 223 rule. I've revised that a little, but well, we like to see, so the 223 was always 2 months to this, but it's really 3 years as a first home buyer. So let me say it out loud one time for you. 30 days of pay stubs. Okay, a full month. So if you get paid monthly, that's one. If you get paid bi-monthly, that's two, right? If you get weekly, that's four. I'm going to want to see 3 years of your W-2s, 3 years of your federal tax returns. Don't be embarrassed to ask, excuse me, what is a tax return? Believe it or not, we have people that are mixing up W-2s and tax returns all the time. Sometimes it's just a slip of a hand, and sometimes it's just an area for learning. If you're not sure what something is on a document checklist, you need to be working with a team that you're comfortable asking. Okay, so that's important. So we said the income, we said our pay stubs, W-2s, our tax returns, and for bank statements, you want to get 2 to 3 months ready to go. You're going to want to review those statements as well for large deposits, weird transfers. Are you someone who clicked that you were going to pay for something later? That's the latest one, I got to tell you. In bank statements, people are paying late. So like meaning, oh, I'll use Affirm or I'll use PayPal. Well, now you have debt. You have extra debt that we have to add into the calculations. We need to get our eyes on all of this early because let's just go back and tie it off with a bow. If I did a one community loan and I had your numbers at 49.8% to wiggle right under that 50%, I get your bank statement. I see you have 3 payments that you didn't tell me about. What just happened? Your debt went up. That debt to income ratio went over 50. You no longer qualify. What are we now doing? We're scrambling to pay off debt or work a wiggle on the numbers. That's going to cost you more money. Okay. So I use that to be sort of dramatic, but we are all pushing these purchase prices to the very limit. I am not joking. I have a gentleman in process right now at 49.8%. And he is one of those people who had those payments in his bank statements. Okay. We had to pay it off. And friends, I'm going to just tell you right now so you can laugh, but also cry with me. This is a client that I saw a large deposit and it was $31,000 from a place called Lending Point. He tried to tell me it was an investment. That's not true. It ended up being a loan for a camper that the family bought. Guess what, friends? We had a new $700 payment that got into the calculations. Do you think my 49.8% ratio could hold that? Absolutely not. We had to scramble, and now he has to pay off all his other credit card debt to absorb the loan from the camper. None of that was disclosed at pre-approval. It all got fleshed out, and that is a matter of him not providing the information up front. Are we getting it done? Yes. Is the experience as calm and planned out as it should be? No. Okay, so I leave you with the thought of the best thing you can do is proactively get your documents together, evaluate a few different loan products, see what your numbers are, and then you, as the driver, figure out which product you want to go with, where you want your payment, and then how that translates out into the market. All right. Oh, I love Denisha. She's got things in bold. I'm looking over at the chat. Let's see if we've got questions because I want to help you stay on your schedule
Okay,
tonight.
none that I
Yes, don't buy
see.
anything. Please don't buy
Please
anything.
don't
Oh,
buy. So while you read through the others, guys, as you prepare to buy a home, consider your life, I don't want to say on hold, but you probably need to operate more in cash than
mhm.
putting anything on your credit because it is going to ruin or increase your debt to income ratio. And as Amy said, we need that number to be lower, not higher. So if you are thinking of buying a home, you should not purchase the car because if you purchase the car first or lease the car, you will not be
Mhm.
buying the house because that payment, that monthly payment, which now feels like it's 5, 6, $700 a month, that is taking or deducting from how much you could put towards a mortgage.
Yeah, you like basically destroyed yourself. I'm not mean being
Yeah,
dramatic, but five,
destroyed.
$700 is like a giant wrecking ball into this home buying calculation. And Denisha said something there I want to point out with the word car loan versus lease, just so you can hear it. When we look at a car loan on your credit report, it's called an installment debt. If that loan is paid down below 10 payments, so 9, 8, 7, what have you, we can remove that payment from the calculation. We can never do that with a lease. If you go lease a car, it is what it is. We're stuck. Okay. When in doubt, always ask. Let me answer this question. Bank statements include Venmo, Cash App, Zelle. Yes, absolutely. And pretend you're the person who's like out with your friends and you're constantly Venmoing each other in and out of your bank statements. We're going to need to understand what's going on because there could be some questions. An underwriter might say like, oh, is there like someone babysitting? Is there money? Is this income? What's going on? That's a great question, Ayana. Thank you for that. Okay, she wrote thank you. Awesome. Awesome. What else can I share? I'm just trying to think top of the mind really quick with what we're seeing. I'm just, the more I stress the paperwork and working towards what I call certainty is going to save you all so much heartache. Because when you have that foundation and your numbers in place, you can be more nimble when you're looking at offers and understand what that is. If you need to go 5,000 more, 10,000 more, these are all very competitive situations. Hampshire County, let me check my cheat sheet. I do not see Hampshire County on that one. So sorry. Um, but that doesn't mean you can't do a first-time home buyer, just not one community. Can we get help at a local office or only specific locations? I would say most of our branches are very good at sort of general information, but if you're looking for a deeper dive, I would strongly suggest connecting with a specific loan officer. And I will also say if you're someone that prefers another language, seek that out if you can find it, because I do believe very strongly in hearing this information in a language that you're fully comfortable in because I don't know
Mhm.
about you, but I don't want to guess or yes. And if you're, all of a sudden, if you're not fully clear on something, that brings so much anxiety and stress. So, I get very passionate about this. So, you know, if you're looking for what I call a language buddy, a lot of times the banks do have colleagues in different positions that can sometimes jump in, or if need be, bring in an interpretation company.
And Amy, do you speak another language?
Oh, I set that up perfectly. Yes, my friends, although I don't look it, I'm a fluent Spanish speaker. So me llama la diva de dinero o que habla español. Just for those wondering, I did grow up learning Spanish at the same time English from a beautiful Ecuadorian nanny and kept it up my whole life. So I do all this madness that we do all day long also in Spanish, as does my team. We also speak Portuguese on the team. My friend, Mr. and Mrs. Stanford, I don't know. I would tell you, I would love for you to send everything in a PDF. I would love it. It would make my life easy, especially if you uploaded it directly to my portal. We understand that sometimes that may not always be the case. Paper, not so much. We encourage clients to go to a branch and have it all scanned. But PDFs are the best just because of how those come across in terms of how we can read them and then the format of the document. Let's see what we got.
I think we answered
Do I
everything.
have to live in the county? No, you don't have to live in the county. One community, great question. One community is based on where the property is that you are buying. So it's just about where you're going to buy and not to make your head spin, but like you'll hear later, Mass Housing Partnership, the MHP one, that's all about where do you actually live today. And so that's a where you live now, whereas mine is where you buying. So that can be very confusing. I wouldn't go crazy trying to understand it all. I would just get a few different proposals put together for yourself and focus on the numbers. Yes, a great question. Aha, you were looking to buy an Amherst. We know Amherst well.
We, that's
My
all
friend,
right. We have presenters. We have
yeah,
everyone. We can
yeah.
make our
There's
work.
other product we can do in Amherst, and we are involved in a project out there, so we are utilizing other first time homebuyer programs there. Great question. Sorry about that.
And
I
I
I
just
would
have
advocate
Amy's.
for expansion.
Yes, you should. Amy, I only had her speak on products that or programs that are different from what we had everyone else present on tonight. but she
Yeah,
does offer mass housing and she does offer the one mortgage, the one plus Boston. Okay.
I'm gonna
So
throw my
although she
email up
didn't
in the chat.
present on that tonight, she does offer all of those because I just want the lenders. So from here on out tonight, it's going to be loan officers that you guys are hearing. They're only going to present on a program that is unique to them that they offer. But they will also mention, hey, I also offer mass housing. I also offer the one mortgage. You're just not going to talk about that tonight because you learned about it earlier on in the session, okay?
Well said. Awesome.
Amy put her contact information in the chat. Thank you, Amy. After
Thanks.
this meeting, I will admit it'll probably be tomorrow. It might be tonight, but hold me to tomorrow. You guys will get the contact information for all of the presenters tonight. So all of the lenders, email, phone numbers, so you can reach out to them. Because like I said, I want you interviewing so that you can decide who's going to be on your team. Okay.
Great. Good luck, everyone. Enjoy the rest of your presentations tonight. Bye-bye.
Buenas noches.
Buenas noches. Nos vemos. Ciao.
Bye.
Goodbye.
Thank you.